Okay, this is a day trading video for tomorrow. Right now it's Monday and tomorrow Tuesday, so this is going to be a trading video for Tuesday. So this is the ES right here. Of course I trade the SPYs, which they follow each other. So I look at the ES only because I'm just so familiar with the point range on the ES, and so I look at that, but they pretty much follow in tandem anyway. But I trade the options on the SPYs. Alright, so this is a 5-minute chart. I got a nice little balance area here. Today the market didn't do hardly anything, didn't move very much, but it just kind of jumped up and down a little bit. But what I mean is it didn't make any really big moves, which maybe tomorrow that's what's going to happen. But my strategy for tomorrow is if this comes up and it starts to bounce around this area, then I can short it right about here once it starts coming down. Or if it never makes it up that far and it comes down here and it does a little dance in here and eventually breaks down, I get a confirmation on that second bar, then I'm going to ride this thing down. In a second I'll show you how far down I think this is going to go. This would be a 30-minute chart right here. So there's a trend here. Of course, this is a short-term trend in a bear market, and I believe this market would at least come to this point if it does break down here, and then that could be a good exit point. Of course, it could come all the way down to here. It could do all that in one day. That's not a problem. But I won't know that until I actually feel the momentum of the market, and then we're going to get some corrections in between. It's possible this market can come down here before a correction, and that would be a good exit for me on a day trade. So I'm looking at these 2 points right here, and that's where I'm going to see if I can get into the market. And like I said, this would be my target for an exit point right here, and I feel like the market could start coming up here, turn around and come back down, and I could re-enter down here if that happens. So I won't know what's going to happen until tomorrow, just depending on momentum. So there's 2 things I look for, and one is trend and the other one is momentum. Now this trend is up, and that's why I drew this line here, and I believe it could come down here and it might bounce and still come back up. But again, if it breaks, then it's going into the longer trend, which the longer trend is down. And then if it breaks, then of course it can continue down, and that would be another good trade too. If I feel the market is coming down around here and it comes up, I still haven't gotten out yet because like I said, I get out about this line, and then it just takes off down here, then I'll stay in. I won't get out here because like I said, I have to feel that momentum first and feel the drive on that. And then eventually it's going to break this line, but I'm not sure if that's going to be tomorrow. Okay, so this is a 30-minute chart. Go into a 4-hour chart, and you can see there's the trend line going up, larger time frame trend going down, and yeah, it's a lot. I'd like to look at all time frames, you know, anywhere from 4 hour to 5 minute, from 5 minute all the way up to 4 hours, and just to get a perspective of where the market's at. So as I said before, I always look at the Russell. If the Russell is going down and the SPYs or the ES are going down also at the same time, then that's good. If this starts to go down and the ES hits its balance area up in here, then that would be a nice trade, because that means this is going to bring the ES down. But there's one thing that I noticed today actually, and that is that the NASDAQ seemed to be, let's see, I'll go down to a 30-minute. This was actually leading the way today. So the NASDAQ never really stayed up in this area. It stayed down here, closer to the bottom of its balance. So I'm going to be watching this NASDAQ really carefully tomorrow. And so the NASDAQ and the Russell are both, I'm going to watch them both. And if they start to come down and break, or if they even come up, this one might come up halfway. Same with the Russell and the ES if it does come up all the way. And these start to turn around, that would be a good trade to get in here for the ES or the SPYs, and then it'll ride this thing down. As far as the Dow Jones has it's come back and it hit its top, and now it might start coming down from this point, or it could poke through. I don't know what's going to happen until tomorrow, and tomorrow we'll see first thing. Okay, so I trade options. So these are the options. If you see, you can see here, this is a March option here, and it expires in 2 days. This one expires in 3 days, 4 days. But this one here, I can be looking at this one. Here's the put section. There's a call section, so I'll be looking at these. This one's at 194. If I buy 10 of these contracts, I'll be spending close to $2,000 just for 10 contracts. Now, of course, if I buy 30 contracts, then it'll be about $6,000, and that's not a lot of money. So you can really load up. If you're a beginner, I would just buy 10. A little bit more advanced, you can buy 20, 30, and even more advanced, you can buy 50 or 60 contracts. There's no problem. You've got plenty of volume here and open interest. That's why I trade the SPYs. Tons of volume and open interest, so you can get in and out even at the last second of the day. I've gotten out like a minute right before the market closed, and no problem. You get out right away. Somebody buys it immediately, and that's why I like trading the SPYs, because the spiders, because it's so liquid, more liquid than any stock. So, of course, I would choose this. Okay, so that's the plan. Like I said, tomorrow I'm going to wait. I'll be at my computer at 6:30 a.m. Pacific Standard Time, and I'll be watching these markets and see what they do. And like I said, again, I'll just reiterate that if this market comes up here and it sits around here, even pokes through, comes down, and starts to come back down, that would be a perfect opportunity to short this right in here. If it never makes it to the top and it comes down, or even in the overnight trading, it comes down but comes back up, and then comes down underneath this balance area, and it makes a confirmation bar. I've talked about the confirmation bars before. Confirmation bar is when the market breaks down below this line. This is support, and the second bar needs to come down further, and that would be my entry point most of the time. It's about 90%, because sometimes the market is sitting here, it breaks down, and there's a chance it could come back up because it's already at the bottom, or actually, well, that too. But the thing is that this one here, because it's at the top and it comes down and it's stretched out, it's got to retrace. So sometimes if it's stretched out this far and it pokes through, it's going to come back up. So it's better that it sits at the bottom here, because this way it can break down and then retrace, as opposed to this right here. So those are the things that you have to watch. You have to watch out for retracements. But anyway, that's what I would do. I always hit the second bar for a trade. Like I said, it's not 100%. Like this one here, hit a second bar going up, and it turned around and came back down this line and came up. So this is kind of tricky right in here, and it built a nice little balance area here, and then it broke down. So it's not 100%, like I said, but I'd say it's in the 90% range. And again, you have to look at where the market's going. Since it's stretched this far, and then this thing broke out, then it's got to retrace. You know, it could have kept going, but it's pretty stretched already. So even though it hit the second bar, it didn't retrace yet in here. You know, if this would have retraced, came back down, then went back up, and then broke out, then it's a different story. But it didn't retrace, and it came back down. Same with this. Came down, stretched out, pretty good stretch here, and it just went right back up. So those are things you look for. Okay, short video. That's my plan for today. It's very simple. I'm not looking at any indicators. Like I said, I will poke at the news just because, and I don't think there's any reports coming out tomorrow, but those reports can actually drive the market for the short term. Doesn't mean that it actually drives the market for the longer term, but for the short term, it can do that. And then and usually when this market is news driven and it pops all the way up and then it's stretched out like this, then it's like, I don't know, 95, 99% sure that it's going to come down in the bear market if the momentum's going down. Then it's just going to turn around. Those are really good trades right there, because that just increases the odds of this thing coming down. Okay, so tomorrow, just going to sit and wait, see what happens in the overnight trading. And like I said, hopefully it comes back up into this area. And if it is stretched out here, then eventually this market's going to have to come back down and possibly a good trade right in here. But I won't know till tomorrow. Okay, talk to you guys tomorrow.